Hi, everybody. It's Jessica Stone at Stansberry Research, and I've got Scott Garliss of the Stansberry Newswire on the line. And Scott, you've been sort of tracking the progress of vaccines against the progress of the stock market this year, and you've got some interesting information. If we think about how the markets are seeing a vaccine, what is the sort of correlation that you're seeing with the charting?
We're going to get into sort of October, November, December, the last quarter of the year, and we could suddenly be seeing a lot of new stories, new data coming forward that's going to be positive or negative in terms of vaccine development and potential approval.
Why is that important in light of another conversation we've had, which is that people tend to sort of drop off and out of the market over the summer, and that has implications for September?
Sure. So, in terms of September, September is the worst performing month of the year for the stock market on average. Looking at data going back to 1928, the returns in September for the S&P 500 tend to be down 1%. But when you look at the fourth quarter, October, November, December, the average return is 2.5%. That is the best quarterly return of the year. That's versus the annual average of 7.5% gains. So in the fourth quarter of the year, you tend to get a third of the year's gains.
So does that mean that we're sort of maybe going to be set up for a scenario under which we see even bigger gains this fourth quarter because of the vaccine race sort of coalescing at the end of the year?
I would think so. Especially look, if you get news coming out from, say, Pfizer in October that they're really optimistic on their trial data, and then we have approval, say, in December. Yeah, that would get the market more amped up about the economy returning back to normal. And the way you have to remember and think about this is fund managers are looking to invest with a time horizon 8 to 10 months out. So if we get approval in that time frame, what they're thinking is people are going to feel better about going back to work, going about their normal routines, because there's a chance they will have received the inoculation before that time. So in 8 to 10 months, they'll be doing things more like they were before the coronavirus outbreak.
Does it matter to the markets if the vaccine is effective or just that it's available?
I think it's a little bit of both. The markets are going to want the most effective vaccine they can get. People are going to want the most effective vaccine they can get. But from a market standpoint, just having one approved is going to be a big sentiment positive, because that means we've made headway, and that vaccine can be made better, or somebody else can come out with a better vaccine. But I think from a market perspective, just getting one approved is a huge deal. Now, if efficacy improves going forward, it gets better, that's going to be an even bigger deal.
Yeah, I mean, every time, certainly a couple of weeks ago when the Pfizer news came out, we saw a big market jump in Pfizer. So it's definitely easy to see where there's a direct response, a cause and effect with how the markets respond. How do you suggest people play this trend? If they think that the last 3 months of the year are going to really take off, what's the position they want to be in going into that?
Or the names I would look at are the names that haven't performed as well during this whole coronavirus pandemic. So obviously tech has done very well because stay at home has created more demand for technology products. It makes complete sense. And look, I think it's pushed a conversation that was developing anyway. But technology names may see some profit taking if we see a vaccine get approved. Names like Coca-Cola, Pepsi, people, again, going back to work, going to sporting events, buying more of these things. People may begin to travel more other than just driving somewhere. They may start flying somewhere. So you would look at some of the airline names would benefit. You get other names like maybe people get back on board cruise ships. So some of the cruise lines.
That's optimistic, I think, but I know you're an optimist. Going to eat out, movies.
Yes, dining, definitely. People will go back and dine. People will go back to the movies. Again, all these routines that we had become accustomed to and sort of took for granted before this happened. I think there's pent-up demand for all these things. And because they have underperformed versus tech so much, I think there'll be an opportunity for these names to rebound even further.
All right, Scott Garliss, very interesting analysis there. take a look at how the vaccines are performing and watch your stock market picks as a result. It doesn't have to be an investment in pharma. It just needs to be timed for when those vaccines are approved. Thanks so much to you for that insight. And if you would like to see much more content from Scott Garliss, hover on the subscribe tab here that you're seeing on your screen, and you'll be connected directly to the Stansberry Newswire. You can also find us on Facebook, Instagram, LinkedIn, and Twitter. And of course, on YouTube. Thanks for watching. That's all for now.